This week in crypto, Coinbase walked away from DC's big clarity bill. Headlines called it a crypto civil war, and suddenly everyone's asking, did Coinbase just rug crypto? Bitcoin chopped in a tight range, Ethereum finally showed a bit of life, alts had little pockets of strength here and there, but let me be real with you though, the story is never about one exchange of one bill, it's whether any of this actually changes the cycle you and I are investing in. Give me a few minutes and I'll actually walk you through what happened and what's just noise and how I'm framing next week from here. So let's start with where price actually went this week. Over the last 7 days, Bitcoin traded in a pretty tidy area, roughly high 80s up to just under 98k, and as I'm recording this on Saturday, it's sitting closer to the mid 90s than the lows. So on the chart, it's still an up week, just without that mad vertical move people keep waiting for. Ethereum actually did a bit better. Most of the week it was bouncing between just over 3k and the mid 3.3s, and right now it's holding up in that 3.2 to 3.3k pocket. And Solana stayed in character, hanging in the low 140s, quick pushes towards the mid 140s, then just little fades back. Basically still the spicier option for people who want a bit more movement than Bitcoin, but don't want to go full on degen onto the micro caps. Total market cap is sat roughly in that 3.2 to 3.3 trillion area, so the whole space has just stepped up a level since last week, but it doesn't feel euphoric, just a slow, stubborn move higher while half the market's still soaking. And sentiment tells me the same story. Midweek, the classic fear and greed index actually poked into proper greed in the low 60s. And by the end of the week, the newer meters had it back around neutral, 49.50, low 50. So overall, I'd call it neutral with a little lean to optimism, but not full send and not panic. And then there's volume. Global spot volume did pick up into the midweek bounce, but compared to the big spikes we had late last year, it's still pretty lame. In places like South Korea, you've literally got local press calling it a crypto ice age, trading down multiple fold from the peak. So price is grinding up, but participation is nowhere near full party mode yet, and that's what matters for what comes next. Now, this is the bit I care about more than the candles, what actually moved things this week. First up, spot trading is still caught in a drought. Even with this bounce, a lot of venues are showing much lower volumes than the big legs just last year. And in Korea, it's literally being reported as an ice age. And that's why every move feels bigger than it looks on the chart. There just isn't as much real flow behind it as people think. So at the same time, institutional money quietly stepped back in. US spot Bitcoin ETFs had one of their strongest inflow days since October, more than $800 million in a single session, and US ETH ETFs added around 175 mil as well. And that was 3 straight green days for BTC funds, no outflows, and big allocations from BlackRock, Fidelity, the usual suspects. So you've got this strange mix where individual investors feels like nothing's happening, but in the background, larger players are still allocating size into Bitcoin and Ethereum every time we dip into the lower end of the range. Price tells that story nicely. Bitcoin's moving slowly but surely higher, but doesn't have that mad retail rush behind it. Ethereum is quietly ahead of the week, and alts are basically a rotation game. Some pockets pump hard, others just sit there. From a cycle perspective, low retail volume, plus steady ETF flows, plus a range-bound Bitcoin. Still looks like the market's reloading and being topped. The risk here isn't the new bear market, the risk is you get bored in this chop right before the proper next leg up. Let's get into this Coinbase story properly because that was everywhere on the timeline this week. Quick version of what actually happened. The US Senate Banking Committee was meant to vote on the Clarity Act, the big bill that tries to spell out who regulates what in crypto. Hours before the vote, Coinbase pulled its support for the bill as written, and off the back of that, the committee postponed the vote. Roll the headlines about industry pullback and landmark bill delayed again. So let's break down why everyone and their mum kicked off. From Coinbase's side, the complaints were pretty clear. Parts of the bill could effectively freeze or ban tokenized equities in the US. DeFi gets treated very harshly, a lot more control pushed back towards big intermediaries. There's much broader access to user financial data and very little on privacy. Tilts more power towards the SEC, takes some away from the CFTC, and still leaves the whole is commodity or security debate messy. And the way the bill handles stablecoin rewards and yields could hand a quiet edge back to the banks. So from their point of view, they're basically saying, we've asked for clear rules and you handed us something that could choke half the innovation we're trying to build on. On the other side, you've got Senator Tim Scott and his camp saying this is the best chance so far at a proper federal rulebook for crypto. They're folded in a lot of Democrat demands around the AML, KYC and consumer protection. And in their words, This is about finally giving the space for real rules of the road so it can grow up. Then you had follow-up pieces suggesting the White House might soften its backing if the industry stays this split. So you end up with this little triangle. Lawmakers saying, we're close, don't blow it. The industry saying, not like this, you're going too far. The White House trying not to own a bill that pisses off everyone at once. So for the big question for crypto bros, did Coinbase just rug crypto? In my opinion, nah. It tells us a few things though. First, we're finally at a stage where real legislation is close enough for people to fight over. That's progress compared to the old regulation by lawsuit and tweet era. Secondly, this version of the bill looks heavy-handed on DeFi, tokenization and privacy, so it's not shocking that the biggest US exchange doesn't want its name on it. Third, and this is the most important bit for you lot watching the charts, none of this on its own flips a bull market into a bear market. The market didn't pump this cycle because Coinbase killed the bill, and it's not going to die because they changed their mind. Price is going to follow liquidity, credit, positioning, and where we are in this cycle. Bills like this decide where the activity actually happens and which platforms and jurisdictions come out on top over the next few years. Don't suddenly erase Bitcoin or kill Ethereum because a committee meeting got moved. So when you see a did Coinbase rug crypto on the timeline, my take is simple. Long term, this fight over clarity matters because it decides how much of the next wave happens in the US versus offshore. Week to week, most of it is just headlines. And I'm still watching credit, volatility and on-chain stress, and none of those flips just because one vote was postponed. On the macro side, same backdrop, but just a few details moving around. You've got inflation more or less in line, job numbers are a bit softer than politicians would like, and tariff headlines still hovering over everything. There were pieces floating around this week talking about potential $2,000 tariff checks before the US elections and breakdowns of how Trump's tariff plans could hit jobs and growth. Traditional markets don't love that. You get the usual wobble in equities and a bit of nerves in the VIX, but nothing major. And crypto mostly treated as black runners anyway. But if you watch the intraday moves, you can see Bitcoin reacting to those macro headlines much more than it used to. It's behaving more like a macro asset now, not some side quest that no one cares about. And one more thread that ties this back into regulation, Robinhood CEO Vlad Tenev came out this week basically saying staking is one of the most requested features from their users, but it's still blocked in 4 US states because of regulatory mess. Can offer stock tokens to customers in Europe, but not in the US. He literally tagged Congress saying, we support a clear market structure bill, just finish it and stop leaving us in limbo. So that's a triangle right now. Politicians, big platforms, and on-chain users all trying to get what they want, with nobody wanting to be the one that officially kills innovation. Now let's talk about alts, because this is where most of CT crypto bros either make money or blow themselves up. This week was very much rotations, not full on alt season. On the higher market cap side though, privacy coins had a good one. Monero, Zcash and the rest of their mates put in solid percentage gains as people rotated back into that privacy bucket again. Most of us thought were dead and buried since 2018 anyway. And it fits the bigger pattern we've been seeing for months. Every time regulation and KYC creeps into the headlines, money quietly drifts into the corners of the market and still feel off grid. Mid-market caps had their own little run. Dash, Optimism, AXS, ENA and a few others showed on a weekly gainers list. Decent moves, nothing insane, but real tradable pushes if you're paying attention instead of doom scrolling. As for meme coins, memes did what memes do. Some of the usual suspects like Pepe and Bonk had eye-catching days, and some of the lower market cap meme coins gave big chunks just as fast as short squeezes faded. If you scan the gainers and losers board, there's always one bit of market moving, but it's not broad-based yet. And then the other side of the board. You still got a whole group of older narratives and heavy VC bags just bleeding quietly in the background. And that's what you tend to see before a proper alt run. Money slowly rotating out of the dead stories into names that actually have liquidity and real trade going through them. From our view on where this all goes, the key is still Ethereum versus the rest of the risk complex. When small cap equities, things like the Russell 2000 keep ticking up and ETH is quietly ahead of Bitcoin in a week. That's the sort of backdrop where alt rotations can get serious late in the quarter. If you want a bigger picture on that, Oz went into that deeply in our latest video on Bitcoin, alts and whether the cycle continues. So after this, if you want the macro plus alt rotation, watch that one next. Okay, so right, it's time for the CT psychology session. This week, timelines did the classic thing. One day, regulations going to kill crypto, volume's dead, Bear confirmed 2 days later after green candle. We're so back and 100k screenshots again. And here's how it all showed up. Enter bullish tweets, we're so back until the next pullback. And that sums up CT in one line. One daily candle goes green and suddenly no one remembers we're calling for 50k last week. You can't build a plan off that. It's Monday, January the 12th, 2026, and once again I woke up with more hex. Life's good, I'll get richer daily. There's always one guy flexing his yield in the middle of a volume drought. Good reminder that some people are just farming their own bags regardless of what Bitcoin's doing. Crypto gets funnier every day. A wallet wakes up after 13 years and the entire market goes into panic analysis mode. 1 hour while wallet moves and suddenly everyone is drawing crime scene diagrams on a chart. Meanwhile, the bigger picture, still an up week. 2026 so far, Trump invaded Venezuela, Nikita Beer provoke a CT war, incels putting random girls in bikinis. It's only 14th of January. That's literally the environment your portfolio is living in. Geopolitical memes, platform beef, and thirst content, all in the same feed as your BTC chart. This is when crypto humor thrives. This shit's hilarious. And honestly, when people are more focused on jokes and positioning, that usually isn't how the cycle tops. That's like mid-cycle type of boredom. US Senate just cancelled the Clarity Act vote. CT managed to spin that as a both bullish and bearish at the same time. Half the replies were regulations dead, numbers go up, the other half were no clarity, everything's all doomed. Reality is, it's just a bit messy in the middle before we get the real rules. Fun fact, Trump launched his meme coin exactly a year ago. Man pulled the whole US election on chain and the chart still looks like a cliff dive. Perfect reminder that most political meme coins end up a history lesson, not a retirement plan. The #1 late night show posted a meme of a flying smoking goat FSG. Memes like that are once in a blue moon. When late night TV is running clips of smoking goats and ticker symbols, you know CT is already 3 trades deep on it. That's a pipeline now, no joke on mainstream TV and 10 new coins by the morning. Alts chilling, memes chilling, bears panicking, interesting combo next week should be fun. That's exactly it. Prices drifting up, memes are calm, and the only people sweating are the ones who shorted the bottom 3 times in a row. The VHS meme coin test is live. Think of it, you've got the best memes in the crypto space. Nothing sums up this market like people spending hours crafting Oscar level memes for an $8 prize and still calling it life-changing opportunity. That one's mad. Making money is simple now. You don't need an office. You only need to learn how to draw simple lines on a chart from your room, join my free Telegram group, and you will make money every day. Bruv, I got no words. Bitcoin is the first cryptocurrency. Everything that came after is a copy. Meme is the first crypto meme in history. Everything that came after is a copy. Do the effing math. Meme. Maxi is arguing about who invented memes now, as if copyright laws applies to cartoon coins. Meanwhile, Bitcoin just keeps doing its thing while everyone beefs in their replies. So that's the mood on CT this week. Old meme coins reminding everyone what a full rug looks like. New memes firing off from old TV clips. Signals Telegram shilling and squiggly lines on the chart. And meme maxis are arguing of who has the full copyrights on when memes were invented. And underneath all of that, price is still leaning higher. People are laughing, arguing, coping, but nobody really wants to step away from the screen and touch grass, just in case this is the start of the next leg. Let's close it off with some straight talk from Oz and how I'm looking at it alongside the on-chain. And this one, Bitcoin rejecting from a crucial area, flipping this area support will be a sign of strength and a road to all-time highs again. Yeah, so the focus isn't did we hit the exact number, it's do we hold the mid-90s zone on the next dip. If we do, the path back to the highs is still wide open. Many have missed the lows, shorting everything in anger. Max pain is higher. You can feel that in the replies. People set out 2025 now trying to short every bounce, and the market just keeps grinding against them. There are people saying no one knows what will happen. While in the short term that could be correct, in the longer term there is no doubt in my mind that this bull market is not over. Do not project your insecurities onto others. Yeah, and that's the key split. Day to day, no one knows. But from a structure perspective, credit isn't saying danger, volatility isn't blowing out, and the big on-chain cohorts aren't running for the exits yet. So you don't let short-term fear rewrite your whole macro view. IWM continues, ETH won't be far behind. Bookmark this. Yeah, when small caps in equities keep ticking up and ETH is quietly outperforming Bitcoin for the week, it's exactly the kind of backdrop where proper alt rotations can build. Not in a day, but across a quarter. long, short, long, short, short, long, account profit loss minus 30%, the life of a trader. And if that one stings you a bit, you probably don't need more signals, you need to do fewer trades. This environment is brutal for overtraders and can be forgiving for people who are sized sensibly and willing to wait. So where does that leave us going into next week? For me, it's simple. On-chain looks calm. We're not seeing long-term holders panic. We're not seeing miners dumping into the market. Macro still looks supportive. Credit is not flashing red. VIX isn't exploding. Price-wise, Bitcoin is sitting near the top of its weekly range. ETH has quietly had a stronger week. Alts are rotating in pockets, but not full send yet. This doesn't look like a blow off top to me. It looks like one of those slightly boring weeks everyone forgets. And then 6 weeks later, they look back and say, yeah, that was an accumulation window, but I ignored it because CT was moaning about volume. If you keep your size sensible, pick your spots, and remember, this is still a bull market until the data actually flips. And the main job is not to trade yourself out of it and coin hop your way out. And that's it for the week. And if you got value from this video, drop a like, comment, let us know where do you think this week is going to go, and I'll see you in the next one.